Hello, everyone. Good evening. Sorry, that was YouTube feedback on my music. I was just enjoying Shaka's yoga. It sounds like Lugba Lugba in Yoruba. Anyways, good evening, everyone. Welcome back to Crypto Pulse Weekly. Happy New Year for people that have not said Happy New Year this year. I just decided to take a break off Crypto Pulse just to reassess a couple of things and get busy with other things for the time being. So welcome back for everyone who's stayed on the channel and stayed on the group. Welcome back to Crypto Pulse Weekly, and there will definitely be a lot of goodies this year. Let me not say this month, this year, uh, from the stables of Crypto Pulse. I just decided that we should start today. I was going to start next week, but since I promised I was going to start early in 2023, and I took January because January was very busy. As a result of that, I decided to start today. So, welcome back to Crypto Pulse. I'm still trying to decide whether we're going to go full blast on the weekly, or whether we'll probably have it once a week or once a month. I think that will be a product of discussion in the coming days or and the coming week. But welcome back once again to Crypto Pulse Weekly, and basically, I wanted to talk about the markets. Of course, I want to talk about what's going on in terms of Bitcoin, and what I think the year holds, generally speaking, in terms of the equities markets, and of course, and the crypto market as well. So let's start without cutting. I mean, let's cut to the chase. You all know FTX is still in trouble. My revised finding. Let me start from there. My revised finding from the FTX saga is that um, FTX was trying to do what Jeffrey Epstein was doing for some of the very powerful people in the U.S. Elite in terms of money laundering and the likes. So that's what it's looking like. And for people who will see this video and say crypto is dead, or crypto is dead because of FTX. FTX was not a crypto company. FTX was a money laundering hedge fund that used crypto as a cover up. That's my summary assessment of the whole saga. It's unfortunate that one, it happened last year around the same time that the Luna saga happened. But FTI's own case is a case of frank fraud. Luna on the other hand, I guess some overconfidence in the case of Luna, because the algorithm worked until it refused to work. So I think Luna's own case was a bit different, but FTX is frank fraud. That's what it is. So, but in terms of what we're expecting to happen, I think that they're just going to release the guy after a while. They would or sentence him to some already served sentence at some point. They posted a bail bond for him. Somebody paid that bond. Who is the person that paid the bond? Nobody knew the person that paid the bond was, and the stuff was not disclosed. So it's obvious that there's very powerful people involved. But generally speaking, I think January has been a very good year to the crypto markets. If we take a look at the way the chart has been behaving, let's go to the weekly. You'll see that we didn't get to that junction that we're hoping. Well, we're thinking we're going to get to, which was 10,760. Structurally speaking, yeah, there's a possibility of reversal, but I'm still wary. To be honest, I'm still wary. I'm still wary of of this behavior. So we've come to the end of this week, and that's why I've actually just kept silent on the WhatsApp as well, because I'm looking out at the way the market is behaving, and usually when you see a behavior like this, something like this bucket shape stuff, it usually dictates market inefficiency, meaning that price went suddenly down and went suddenly back up. It means that that price range, there's been what you call market inefficiency, and it's likely that you are going to have that price range being traded again. And this kind of output, if you finish this week below 23,000, then I'm almost certain that we'll retest. If we don't get to 17K, but we'll retest that region again before we start any serious move upward. And that's why I've not said anything. I've been very quiet as regards this recent pump, and also because when everybody's already expecting something, like everybody, like I was saying, I think 2 months ago, when somebody was asking that when is the bottom, when is the bottom, I said I expect that the bottom will start to kick in right from December last year to April this year. And if any time after that, I don't think we're going to see Bitcoin in the ranges that we have it right now. And I think this is the first attempt. That's my impression. So if we have a very strong week next week, then we'll probably be looking at, yeah, we'll probably be looking at 28 or 30K. But if the price behaves the way it's behaving now, then we'll have a retest. So if you come back to the daily charts, you see what I'm saying. So on the daily chart, it's already made a U-turn. The price already made a U-turn, and it's looking like it's heading down. Now that is not to say that it can't pick up from this U-turn on the daily chart. But what I was saying here is even more pronounced here. So the way the price dropped here is almost like an anomaly, and that's why the price has corrected back up, just the same way it dropped from beginning of November. It's corrected back up to the 21,000 range. Now, if I drag this further down, you see that that range has been support and resistance for a long time, meaning that there are so many market participants that are interested in that range. So there are buyers and there are sellers that are interested in that range. So right now, the market is sitting above that range. Yeah, we can say that the market is sitting above that range. However, in fact, it's almost like a zone. Let me not say range. Let me say zone. Maybe that's a better way to put it. So this zone, if I drag it down a little bit, the market is above the 22,000 zone. But if you look at the upper zone, which is here, the market is still sitting below 24,000, which is the zone of interest here, because there is a lot of supply at 24,000. There is a particular, what's the name of this mining company? I forgot the name of the mining company. They started selling their Bitcoin this year. Today, they sold 1,500 Bitcoin. So it might have been absorbed OTC, or it might have been absorbed by any of the centralized exchanges. But I think we'll see the impact of that sale very shortly. So I'm watching out for the 24,000 zone. Like I told one of my Twitter friends, is a very good analyst. I told him that, he said, well, the fractal looks like if we're beginning a bullish journey upward. So I told him that, well, I don't doubt it, but I want to wait for 20,000 retests. And the reason is, if I drill down from a daily chart, I'll show you what I mean now. So this zone is a critical zone. If Bitcoin doesn't break this zone, then it's not going anywhere soon. It might not go down significantly beyond what it is right now. But if it doesn't break the 26,000 zone, then it means that my original prediction of 10,600 is very much in play. I'll show you on the 4-hour chart now to see what I mean. On the 4-hour chart, here's what I'm saying. On the 4-hour chart, you see that we tested this zone originally back in when was this? Back in May of last year. And then the market just zapped up from that region and stayed at 28,000 up until June, when it finally broke down into the 25,000 zone. It tried to go back three times, or three or more times, and it didn't succeed in holding 25,000. And since then, we've literally seen Bitcoin go as low as 16,000 plus. So what I'm saying is, if for the people on Instagram, you can join the Crypto Pulse weekly YouTube channel. It's live on YouTube channel and it's also live on Zoom. I think the details of the Zoom should still be on my bio. So what I'm just explaining the daily chat and the weekly and the 4 hour chat. So what I'm saying is, usually when you have that strike, breakthrough, and retest, it means that the market is going to go further down in the original direction. So this impulse that we have has better be strong enough. Otherwise, it portends a further downside, and that's why I've been very cautious about making any predictions about the immediate price of Bitcoin. I don't think it's going to go. If it goes through and we stay above 26,000 for the next 1 week, then there's a good chance that the market has really started to recover. But like I said, there are too many macro indices at play. One is the US government bond. Now the US government bond, on which the dollar strength is resting, has not really tanked, in the sense that even though the Feds have been reducing their, or looks like they'll be reducing their rates, it's not really it's not really come down like that. As a result of that, the equities market is not really getting the funds that it needs yet. Secondly, the Ukraine Russia war, or let's say the Ukraine war, because Russia is the one the aggressor. The war is causing a progressive shortage in food supply. I don't know if you noticed that, but well, maybe if you're in the Western world, you may not notice too much. But you will notice if you're in the Western world, because there's inflation. So you notice that the price of things are high. In the developing world, it's cascading into farming and food scarcity. I think there'll be a lot more of that in the months to come. Like I was telling somebody in Nigeria, that if you have farmland, it's better to cultivate that land for crop. And I mean, that's a candid advice, by the way. It's better to cultivate the land for crop, because there's going to be significant food scarcity in Nigeria. Many of the grains that we buy from Ukraine in West Africa. If you don't know that today. So the war in Ukraine has caused a global shortage of grain. So we're better off uh, making provisions to feed ourselves, because otherwise there's going to be serious trouble for the West African and even sub-Saharan African countries this year and next. So on the macro, there is rising cost of commodities. There's still inflation to battle. The Bank of England raised their interest again, despite the fact that people are saying inflation is better, it's come down. But we need to bear in mind that the money that was pumped into the system during COVID, that money is still there. It still needs to be mopped up. So all this interest rate hike is just a reverse engineering way of mopping up the rate hikes. So I mean, the mopping up the effects of inflation. So because of that, I'm a bit cautious about making wild predictions. I know people on the internet are already getting crazy and saying, "Oh, Bitcoin is 30K, Bitcoin is 50K, Bitcoin is 60K." No, I don't think I don't think we're there yet. One, two, the the cycle context for Bitcoin is very important, because if you understand how the Bitcoin cycle works, then you understand that we're just on the cusp of getting into another bull run. The whole of last year, we can say, was bear market. Significantly, the whole of this year is going to be bear market. 2024 is when the next halving, which is next year, is when the next halving is supposed to take place. There has been some speculations that it might be earlier than March 2024, which was the original plan date, because there are some quantum computers have been added to some mining pools, and they might make the difficulty easier. But it's still all speculation until when the halving happens. But before the halving happens, usually you have an appreciation of price. And that's why I said the timing of when the halving will happen against the recovery of the macroeconomics seem to almost be parallel, because by the time we get to Q2, we'll have had at least two, what's it called, GDP results to look at. As a result, the Feds and the central banks will have probably tapered down on the interest rates. And because the housing market is going to start getting hit from this quarter, you're going to see that the housing market is going to start getting hit. And the government do not like the housing market getting hit. So at that point in time, they will either turn up the tap in terms of the quantitative tightening or reduce the interest rates progressively. So until that stops, until the interest rate stops completely, there is no free money. Let me use that word. There's no available money to push into the equities markets. And it means that the US dollar is still the most attractive form of investment for the big money movers and the people, the big hedge funds that have the trillions of dollars at their disposal. Bearing in mind that those people, as I always say, they're looking for the easiest cost of capital. What do I mean? If you have $1 trillion, you're not looking for 10% on your money. 1% is okay for the year. As long as you know what you have is enough to beat the hurdle rate of inflation, you're fine, really. So for them, putting their money in bonds markets helps them to stay above inflation, because what it means is the US dollar is the strongest commodity currently. So as long as their money is there, they're making 1 or 2 or 3 or 1.5%. They're better off than putting it in stocks. Now we can talk about stocks. I'm not a stocks guru, but for people that are interested in stocks, just a tip that I wanted to drop. There is a new discovery of cobalt in the North Sea. I think it's either Norway. I think it's Norway that's just discovered under the sea. It's a fresh discovery. It's probably worth about a trillion point $5 or so. That's the worth of how much cobalt they found there. There's a company called TMC. I saw that. I can't remember where I saw the post in the week. So for people interested in stocks, I'm actually going to look at it. I'll probably buy it for one of my countries. It might be a very interesting stock to own because people don't know about it yet. And stock is stocks generally down, but that's just on the side. Talking crypto now, there are a number of crypto tokens that I think are poised to make big moves on the market in the coming bear market, in the coming bull run. One of them, of course, is Ethereum, and the reason Ethereum is going to make a lot of moves in the coming bull run is because it's now become officially institutionalized. Let me use that word, meaning Ethereum has become, it's no longer, it wasn't really decentralized, but it's no longer decentralized in any way. Ethereum is now completely centralized. The biggest proof of stake holders of Ethereum are Blackstone, what's the name of BlackRock? Sorry, I said Blackstone. BlackRock, Coinbase. I can't remember the entity holding custody for Coinbase, and 3 other ones. They are basically big guys. They are big bankers and big institutions. So those are the big holders of Ethereum, and YouTubers would like to shield their shitcoins. Um, Banks will also like to shield their altcoins. So I expect that Ethereum is going to get a lot of buzz. Definitely going to get a lot of buzz. Ethereum and layer 2 solutions. And I think I mentioned this before. Well, what layer 2 solutions are meant to do to provide a sub-ledger, let me use that word, a sub-ledger reconciliation layer above the original blockchain, then rolls the summary of those transactions into the blockchain. So I find it difficult to say this without recourse to people in accounting. It's people in accounting that will understand what I'm saying. In accounting, when you have like accounts payable or accounts receivable, which is like the vendor or the customer account, there's a main account which they call the control account. Then under the control account, you have what you call the subledgers. In those subledgers is where you have the individual entities that fall under that category. So let me explain this in plain business terms. If I have a business, I have vendors and I have customers. To represent that for financial accounting purposes, I will have an account designated as accounts payable, which is the people that I owe, which are my vendors. Then I'll have another part called accounts receivables. Those are the people that are my customers I'm getting money from. Now, to keep an accurate record of each of those guys, all my customers will be under the bunch or the family of accounts receivables, and all my vendors will be under the family of accounts payable. Now, in accounting, you will regard those customers and those vendors as sub-ledger entities, meaning they belong to a group of accounts. In this case, it's a account payable or account receivable. So the same way it works in accounting, where your individual vendor, when you're reporting it in the face of a financial statement, is going to report under the control account called account payable, even though you have the individual vendor line items and how much you owe them or how much they owe you. That's going to show up at the line item level. So for layer two solutions conduct the transactions faster and quicker because they are running on lighter blockchains and the algorithms are smoother and less complicated than layer one solutions. Then what then happen is they batch up their transactions and then post it into the layer one solution. So in this case, what I see is that layer two solutions are going to take a lot of, they're going to take off a lot because Ethereum is going to be a very big play in the next bull run. You wonder why I've not mentioned Bitcoin. Well, Bitcoin, of course, is the one that determines the cycle. Just um, for lack of a better example, the womanhood or the womanhood of a reproductive female is determined by the menstrual cycle, meaning how they can get pregnant and when they can get pregnant is dependent on the menstrual cycle. So the same way, the crypto market cycle is dependent on the Bitcoin halving. For the purpose of people who do not know what Bitcoin halving is just an algorithm that's been built into Bitcoin that makes the production drop every 4 years, or approximately every 4 years, or 10,000 blocks. What that does is it takes care of inflation so that Bitcoin doesn't go into oversupply, and it also ensures that there is incentive for the people who are mining or keeping the Bitcoin network secure. However, Bitcoin is a threat to most of the fiat currencies that we know today. And that's why the governments and various banks have been positioning one way or the other to undermine the effect that Bitcoin will have had originally on the world economy. And I've said this before, that this is a battle for the democratization of money. And it's going to go on for a while because just the same way the battle for the printing press and democratization of knowledge took centuries of war, it's going to go on for a while and people are going to come up with all sorts of things. I know that they've gone as far as creating dissension within the what's it called, the forum of the original developers that are supporting Bitcoin. Some guys still want to further upgrade on Bitcoin. The original OG says we don't want an upgrade. Let's just leave Bitcoin like this and not touch it and not tamper with it. So I know that's still going on, and there'll be a lot of attempts to undermine the veracity of that blockchain. But as it were, it's still the best thing humanity has come up with to transfer value within space and time at the cheapest possible cost. And I always say, because when you say things, sometimes people don't get it. You need to say it over and over and over and over and over again before it gets into subconscious. And that's why I keep saying it, that this is the greatest invention, one of the greatest inventions of mankind, being able to transfer value across time and space without any significant cost. So if you were to go from London to New York with $500 million, your logistics cost alone cannot be less than $200,000. There is no way, because you're going to get a private jet, you're going to get bullion vans, you're going to get security company to move the cash, both out of wherever vault it is in London to the plane, and then out of the plane again when you get to New York to another vault that you're moving into. And that's just 500 million. If it was more than that, then you have more problem. I remember somebody asking me one day that how much do I think 5 billion naira is in physical quantity. So I said, there might be a stack of 1,000 notes, maybe as big as two desks. And the guy said, no, that means I've not seen it before. That 5 billion naira in 1,000 naira notes fills up a 20-foot container up to halfway, top to bottom. That was the first time I mean, frankly, I didn't know I didn't know how 5 million naira looks. 5 million naira is like $5 million. I didn't know how it looks physically in 1,000 naira note, but he gave the examination, so I knew that the guy had seen it before. The way he was describing, he said it's top to bottom is half a 20-foot container. That's how much it is. $5 million. I mean, so if you bring that to dollars, it's still a lot to carry. So to move that within time and space, it's going to cost you money. It could cost you your life. It could cost you a lot of security hassles. In fact, you can't move it. Excuse me. You can't move it normally through an airport. It has to be to a special arrangement. Of course, you need a private jet. You need all sorts of clearances to do that. However, you can move $1 trillion worth of Bitcoin from Australia to New York in 20 minutes at the cost of less than $20. That is significant. That is the height of efficiency in the transfer of value. That's the height. I mean, there is no, I don't know what else can be done. I mean, except the materialization that I talk about in quantum physics. I don't know what else could make it as efficient as transferring value. So yes, there is a battle for people not to realize that that technology is existing and the potential it has to destabilize completely the hold of governments on money. You see, money is the means by which government is able to hold control on its people. If people have access to money and they have access to whatever things they want to do, then the government can't do anything. The government can't hold it because everybody will be self-sufficient. So to the common man, because government is not able to use knowledge, knowledge is now available. Knowledge is available all over the internet. You can literally go to school on the internet from the time you know how to read and write to when you get to university. You can go to school now on the internet completely, in some cases for free, and learn a trade from it. So knowledge is completely decentralized and democratized. But this is a battle for the democratization of value and money. So because of that, there are forces that are fighting actively and passively to undermine that. And that's why I've not talked about Bitcoin. Bitcoin is probably going to get to 1,000, 120,000 in the next halving, or at least 100, because of the effect of the halving and the flow of money. I've also seen, looking back since the inception of Bitcoin in 2009 till date, that the flow of money in and out of the crypto market is beginning to simulate the flow of capital in the equities market. I just saw a tweet from one of my friends saying Ethereum is stronger than Bitcoin. Yeah, Ethereum is going to be moving at a lot faster rate than Bitcoin in this season. One, because of what I said earlier on about the centralization of Ethereum. Two, because the price of Bitcoin is hard. Let me use that word. The price of Bitcoin is hard because it's based on very strong metrics. The miners need to cover their costs. The miners have been running at a loss now for almost 6 months or more. So the miners will need to cover their costs. Most of the small scale miners have capitulated, meaning they shut down their miners. They can't keep up with the electricity cost. So they've shut down their miners. So the people that are mining now are the big scale miners that have a lot of capital, runway capital, to continue to mine without selling their Bitcoin. And some of them are even selling. So the price of Bitcoin is not going to go up significantly. I don't expect that will exceed 50K this year. I don't think so. Even if it goes up, I don't think it's going to go back to 50K until probably next year. But once it goes back to all-time high, which is 7,000, then I expect that at the minimum, we should have like 120, the minimum, or at 100. But my expectation is somewhere between 120 or 150. It might not get up to that, but that's the minimum I think it would at the peak of it. Because when you look at the current macro, so if you take this year as another bear market, generally speaking, on the macro level, then quantitative easing will probably start in 2024. Government will start to pump money back into the system. They'll start to find a way to prop up the market again and boost confidence. So I think that by that time, the price of Bitcoin will have been staggeringly high. Of course, nothing to say that Ethereum could not be selling at 10K or 12K at that time. But generally speaking, I think people need to take a step back and not look at the 1 or 2 year capital gains on the investment in crypto. And I've had this discussion with a number of people who invested maybe in 2021 or late 2020, and they're like, the Godimi, you know, when you told us to buy, the market was at the top. Yeah, you can't time the market. But one thing I always say is that timing the market is more important than the time you got in. What does that mean? The time you got into the market can be at the peak of the market, but the longer you stay in the market, the more you accrue value to yourself. And it's simple. So we can take a step back 5 years. About 5 years ago was 2018. 2018 was the peak of the bull run. Yeah, it was beginning of 2018 that the market started to tank. Now, at that point in time, it got to 19,700 and something, and then started to crash. So if you got in mid 2018, you will have met Bitcoin maybe around 10K. Or if it was this time 2018, you'll have met Bitcoin around 16K, which is not far from the price it was a few months ago. But if you got in at that point in time and had a 4 year gap in mind, your 4 year would have been end of 2022, at which time you'll be looking at 50K, which is like more than double in value. So understand that Bitcoin is like the technology itself, while Ethereum is like the platform that enhances the technology. Um, and I've given a number of analogies, like you can consider Bitcoin as gold and you can consider Ethereum as petroleum, because petroleum has it's very ubiquitous in its use and its applications. So Ethereum is like that. You can use it. In fact, most of the things that you have as fallout technology from crypto today are as a result of the Ethereum technology, not necessarily because of Bitcoin. The ones that came out of Bitcoin were like Ethereum. So Ethereum was created because of the concept of Bitcoin. A number of coins were created at the same time like that, like Litecoin, Bitcoin Cash, the original Bitcoin network, of course, Ethereum Classic, which was the original Ethereum network that was hacked. I think XRP came much later. But so you had many blockchain networks that were created to model the Bitcoin network. But what I'm saying to you is that technology that Bitcoin makes available, it's a significant gift to humanity, because what you're going to see in the next 12 months, well, let me not say 12 months, in the next 24 months, let me be generous, is that economies will switch many economies will switch from paper or physical notes to digital notes. If you've been a very long time follower of this channel, back in 2020 September, I mentioned for the first time that central banks were conducting experiments and carrying out test runs with central bank digital currencies. I gave about 5 central banks then that were involved in the project. Bank of Japan, Bank of England wasn't involved at the time, but they joined later secretly. Bank of Japan, Bank of Canada, European Central Bank, I think the Swiss Bank, and the one in Singapore. Um, that project finished in 2021. So all of them have had their rounds of CBDT test runs, and what's going to happen is, you're just going to hear that one of them is probably going to start with the recalibration and say, we're recalibrating our currency. If you had 1,000 before, it's now 10. And, this 10 is a digital currency, is available on that's how it's going to start. There'll probably be incentives for people as well, that, you can get things cheaper if you're using the new currency and all that. That's how they get people to start moving to central bank digital currency. Understand that central bank digital currencies are different from your traditional cryptos. I don't think tonight is going to make good justice or do good justice to that thesis. But let me just say that central bank digital currencies the ultimate surveillance tool for monitoring capital and capital flow. Is the ultimate tool. How? So CBDCs are not your stable coins. Stable coins are tracker tokens that track the value of real life currencies. CBDCs are currencies that are owned and controlled by the central banks that own the blockchain. So if I was to give you an example with China, China has their own blockchain. In fact, they created a digital currency ahead of everybody else in 2020. They they were giving it for they were airdropping as we use the word. They were airdropping the central bank digital currency to the citizens in some provinces as early as May 2020 when the halving happened. And as a matter of fact, that was around the time they depegged from the US dollar on their stock exchange and started using yuan. Then they created that I can't remember the name of that currency, but it was a digital bank, whatever. And they were airdropping, I think, £100 or £30 to each of the citizens. I can't remember. It's not an available token, by the way. So it's not a token you can buy off the market. But what I'm saying is that it was on their blockchain. They own all the nodes on that blockchain, and as a result, they know how the money flows on the blockchain. So think about it this way. I don't have any charts to show you. I will have tried to show you an analogy. So a blockchain is like a network. What's a network? A network is the connection of computers. The internet is one big giant network that connects servers from all over the world together. The advent of the internet was what brought about the creation of applications that don't necessarily run on a computer, but they can run on a network. I'm going to say that again, just so that and make it easier for people who are not computer geeks. A network is the connectivity that connects a computer. So it might be through a machine called a router or a switch, which are like those routers and switches are like network computers. I'm sorry if I'm getting technical. I'm just trying to explain how this thing works in a simple manner. So the computers you have in your house are normal computers. There are what you call routers, switches, and splitters. I can't remember the third name. Or Wi-Fi. Your Wi-Fi, yes, your Wi-Fi is a good example. Your Wi-Fi, the one you connect to, is an example of a router. Now, those are computers, but they are network machines. Their specific design is to be able to connect signals together from different devices across different domains. That's why those machines are built. They are in different scales. Many of your internet service providers use massive routers to transmit services from the servers, the website you go to across the world using satellite and all that. So the creation of software that can run through networks became popular because of the internet. It was on the back of the technology of the internet that you now have blockchain applications, or what you call decentralized apps. So these applications, they run like the codes that is running the network machines, like the routers and the switches. However, they're a little bit more advanced in that they need all the components computers to participate for them to run. So as long as they have 2 or 3 computers, you can run a blockchain. That's what I'm saying. Now, blockchain like Bitcoin has like 22,000 or anywhere between 22 and 44,000 nodes, meaning the people that are contributing to the network. So the network will continue to run. As a matter of fact, there is an additional node of Bitcoin, a mining node of Bitcoin that has been launched into space. So right now, there's a mining node of Bitcoin that's sitting in space. So if all the earth was going to go up in flames, you still have 2 nodes active that's still running the Bitcoin network. That's how formidable the Bitcoin network has become. So each blockchain needs at least 2 computers to keep it propagating. So anyone that joins them after it shuts down, maybe there was a nuclear blast and all the computers shut down, and only the guys in space, in the International Space Station, remain. If they plug their computers to the Bitcoin network, the computer will get updated with the information of transactions that has happened in that space of time. So that's how blockchains run. So what I'm saying is the CBDCs don't run like that because all the participating computers belong to the government. Anybody else that want to participate will either be their own banks or the banks that they trade with. So if you, as a user in the country, want to participate in that network, every single thing that you have, your wallet, the wallets that you interact with, and all the transactions that you make is completely visible because the information is getting distributed in real time. What's more, because all the nodes are controlled by the government, they can shut you down, they can block you. In fact, it's more sinister than what is currently happening. So, in today's world, if you want to cancel people, like people that have been cancelled, like Kanye West or what's this guy's name, Tate, Andrew Tate, they can block your account and just, some companies just lock a complaint against you. They block your social media, they block your bank account, they block your credit card. If Kanye West said his Apple Pay was not working at some point, so they can do that right now. But what I'm saying is they even have more control beyond that because what it means they can reverse all the transactions you've done and make them null and void because everything you are doing will now be on the government's blockchain. For people who don't understand this, it's a build up. It's a build up to a power grab. There's a global brain. Let me use that word. A global brain behind a power grab to harmonize all the powers, economic, technological, and otherwise, into a unitary entity that's centrally controlled. I can't go into the details of that today because it might sound religious to some people, but it's quite technological. So CBDCs are coming. Prepare yourself by buying Bitcoin. You notice I'm not saying buying crypto, by buying Bitcoin because, as it were, Bitcoin is one of the very few networks that cannot be tampered with like any other. So Solana was attacked more than 6 times in the last 2 years. Many of the tokens that are centralized tokens, many of them you see them fall flat. Some of them have lost 90% of their value because all of them's all of their values is tied to the value of Bitcoin. So when the value of Bitcoin is down, all of those cryptocurrencies will come down. If you want to make quick money, you know, you can subscribe to altcoins. I think in Q2 or by the end of Q1, I'm going to restart the subscription service because I'm going to plug into some bigger subscription companies. So for people who are interested at that point in time, I will let you know. I'm going to plug in some subscription service so that you know some altcoins that you can buy. And these are just speculative coins. You can buy them, sell them after 6 months or 1 year, make a decent profit, and grow your capital base. But from a long-term perspective, understand that Bitcoin is real estate. I'm saying it again. Bitcoin is crypto, or Bitcoin is digital real estate, and it's not going to go anywhere. All other cryptos, including Ethereum, they are commodities. As a matter of fact, all other cryptos in the United States except Bitcoin and Ethereum are regarded as commodities. So they're treated like stocks and things that you buy on the money markets. So my parting word today is be prepared because CBDCs are coming. One, two, for developing countries are going to have some tough time this year because global food supply has been hit significantly, and the effect is just going to be manifesting. Um, I don't know if you're in the US, there's already egg shortage for people. If you can ask the guys in the US, I don't know what's going on, but there's a lot of noise. There's egg shortage in the US. I don't understand why there's egg shortage. Those guys can produce millions of chicken in a day, so I don't understand why there's egg shortage. But there's egg shortage in the US. In the UK, it's just everything is just the cost is just skyrocketing. Everything, everything just going up. So um, it's important that we understand what value is. We understand how to properly store value, and we understand what money is. These have been covered serially either through crypto pulse sessions or some of the crypto summits we've had in London or in United Kingdom at various points, understanding that money is a creation, or currency, as they call it, is a creation of the governments to drain individuals of value. So the more money you keep in your bank account, the poorer you are. I think I should stop. I think I should stop tonight because I'm going to go into some things I'm not going to be able to fully explain. But just understand that, you know, you're better off holding your assets either in real estate or in Bitcoin. Regardless of what the price of Bitcoin is at any point in time, it doesn't really matter. You are better off holding your assets in Bitcoin or in real estate because the government has the lever to control the production of money. Meaning the government can decide to increase the total supply of the US dollar or reduce it or push it forward. And as they increase the total supply, it's just principle of dilution. As they increase the total supply, automatically what you have has become less worthy or of more or of less value. So if you had 100,000 and then the government increased 25% like they did during COVID, then it means that the true value of your 100,000 is now $75,000. So understand that and keep that at the back of your mind. We all go to work, we all have businesses, we're all working hard, trying to make a living. But understand that the government is also working hard to take that living from you, whether consciously or unconsciously. Apart from collecting taxes, they're also controlling monetary supply. So that's my parting charge for you for the first session and the first episode of Crypto Pulse Weekly. Like I said at the beginning, I'm yet to determine whether we should do this weekly or we should do this bi-weekly or it should be once a month. I'll put out the poll and see what we'll come up with in the coming weeks. I think that will be all for today. If you do have any questions on Zoom, please unmute your mic and let's have your questions. If you have questions on Instagram, type in your question and I'll answer your question accordingly. So I see Tonex G, Dr. K, Ashley James, Martini, the Mr. Tini guy. Ayoyinka, I see you. Dr. Lallery, I see you. Tolu, Richard, Jaido, Kwame, and Mr. Badiwa. Happy New Year to you all. So if you don't have any questions, I'm happy to let you go and have a lovely weekend. See you again, same time next week or the week after. God bless.
Thank you very much, Dr. James.
Thank you, Doc. Happy New Year.
Same to you.
Thank you. Happy New Year.
Happy New Year.
Same to you.
Happy New Year. Nice to see you again.
Nice to see you, sir.